Learning to day trade futures changed everything for me. It's the one market where retail traders can finally trade on a professional field with transparency, real market volume, and the same exact data that institutions use every single day. Now, I'm not here to sell you on some magic setup or some overnight success story. My goal with this video is simple: to walk you through exactly what futures contracts are, how they work, and how to get started the right way, safely, structured, and with purpose. We're going to cover what makes futures contracts different than forex, CFDs, crypto, stocks, and even options. Why leverage can be both your best friend and also your biggest risk. And how to choose a proper broker or prop firm without getting burned. Then I'm going to show you how to get started practicing in a demo simulator. We'll go over some platforms on how to do that, from things as simple as pressing the buy and sell button to getting comfortable with the flow of the market. My suggestion is that you do all of this before you ever risk $1 of your own money. Once you get a feel for how the futures market really moves, that's where structure is going to come in. And that's where my trading system, the VWAP Wave system, is going to pull it all together for you. It's built around auction market theory. We use the VWAP, volume profile, and real market structure to help you trade with some real clarity instead of emotions. So whether you're here just because you're curious about futures trading or you're ready to start your first evaluation account, this video will give you the foundation and the roadmap to get started. Stick around to the end, and I'll show you how to download my free VWAP Wave course setup guide and join our free community so you're not learning alone. So let's get started and let's jump in. Okay, everybody, let's dive into the presentation here. This is Day Trading Futures 101, and looking forward to bringing you through this. You're probably a newer trader, or maybe you have experience trading other asset classes like forex, CFDs, stocks, and you're interested in futures trading. So this will be a great video for you. Okay, so what you're going to learn in this video is what futures are and how they work, why futures are the best kept secret for day traders in particular, and why they're superior to things like day trading stocks and forex and CFDs. We'll talk a little bit about leverage and risk management and how they work. We're going to talk about how to find the right broker for you if you're trading cash, or a prop firm if you want to keep and mitigate your risk and spend a small amount of money to get involved and start learning how to trade and also make money at the same time. We'll talk about how to safely get started using a simulator so you can actually practice in a no-risk environment. And then once you have all of these things down, we're going to move into trading an actual system. And that's where my system, the VWAP Wave system, comes into play. And we'll talk a little bit about that as well. So what are futures? Futures are standardized contracts to buy or sell an asset at a future date. Okay, what that means is the futures contracts and market were created for hedgers, especially in commodities like soybeans and corn, oil, so they can hedge their positions, stabilize price. And then the other people that take the other side of that hedge is generally the speculator, and that's what we are. These were created many years ago for the producers, and they are a great way of getting involved and being able to speculate on price to be able to profit as a trader. Futures contracts are traded on a centralized exchange. All right, so for example, the S&P 500 and the NASDAQ are traded on the CME, and gold and oil traded on NYMEX and COMEX and things like this. The beauty of a centralized exchange is that all of this information is passed through one spot. So every single trade that takes place is shared with everybody trading. Now, this is very different than forex and CFDs that do not have a centralized exchange, right? You're only going to get the volume data from your broker, and the trade's taking place at your broker level. So they can manipulate data. You're not privy to all of the information. So already, just by trading CFDs and forex, you're at a significant disadvantage as a retail trader. As far as stocks go, there's dark pools and off-exchange agreements where a lot of the large players are being able to conduct business without retail ever seeing it. This does not happen as much in the futures market. So each contract represents a fixed size of an underlying asset. So what does that mean? If you have an S&P 500, right? This is the ES contract. All right, we trade ES, and an ES contract, let's say ES is at $6,700, and there's 4 ticks in a point, and there's $12.50 per tick. All right, that means $50 per point, and then you multiply $50 by $6,700, and then you get what is essentially the notional value of the contract you're trading. So essentially, just by trading one full-size ES mini, you're trading a position size of $335,000. This takes place in many markets. We have the indices like the S&P 500, the NASDAQ, the Russell, which is the small cap index. We have the Dow, which is YM. We have the metals such as gold, silver, copper, platinum. We have the energy market. So you'll find oil, gasoline, heating oil. We have the cryptocurrencies. So you'll see Bitcoin, Ethereum, and XRP traded. And then agriculture is also a huge market. You'll find soybeans, corn. You'll also see live cattle and lean hogs traded all on the futures market. Okay, so we went over this example here. So everything is fixed, right? You trade one contract at a time. We talked about the ES, which is the full-sized mini contract. There's also a micro version, MES, and essentially that's 10 to 1. So for every ES, you can actually trade 10 micros. So 1 micro is 1/10 of an ES contract. So what's 1/10 of $12.50? $12.50. Right? It's $1.25. So instead of every tick on ES moving $12.50 or a point being $50, on MES, a point is just $5. All right, so you can really manage your risk and trade a lot smaller using micros. Almost all of the products have micro versions. So for the indices, all right, ES is the S&P 500, NQ is going to be the NASDAQ, RTY is the Russell, and then YM is the Dow. Right? These are the contracts you would trade for those respective products. They all have different price levels and also ticks per point. So you're just going to have to learn them. All right. They're not consistent. Right. Whereas our ES has 4 ticks to a point, the Russell actually has 10 ticks to a point. Whereas YM, it's just points. Right. There's no, each tick is 1 full point. So it's different. You're just going to have to learn them. When it comes to the energy market, CL is your oil. All right. 10 cents on oil is a tick, and there's 10 ticks in a point. You have RB, which is gasoline, heating oil. As far as the metals go, GC is your gold. SI is silver. HG is copper. And then you can go into agriculture. ZC is corn, ZS is soybean, and so on and so forth. All right, so there's different contracts. And you have to learn, right? We have cheat sheets and things you can use to be able to learn which is which and what the value per tick is. They're all different. They all have different trading hours for regular trading sessions. They all have lots of different information about them. So you can't assume that they're all the same. All right, you have to learn which product is which. And my suggestion in the beginning is just learn 1 or 2 markets. Maybe start with the S&P 500, the NASDAQ, or oil or gold. Keep it simple, learn 1 or 2 of these, and then you can add more to your repertoire. So let's talk about a little bit about the differences between futures contracts and, say, for example, stocks. All right. Futures trades 23 hours a day, 5 days a week. Opens 6 p.m. Eastern Standard Time on Sunday, runs till about 5 p.m. It closes for an hour and then opens back up again at 6 p.m. Eastern Standard Time and runs all night. The stock market itself, even though there is overnight trading, it's extremely illiquid. This only runs 6.5 hours a day. Stocks have low leverage unless you're using margin. And even then, you're not going to experience the type of margin you'll get with futures trading. If you're a stock trader, you're probably in the United States, you're probably very familiar with the PDT rule. You need at least $25,000 to day trade stocks. Not true with futures, even though they're probably getting rid of this rule very, very soon. There is no PDT with futures. You can trade it with as little as $100 in your account. This is a nice, beautiful part of futures is that you can always and easily short a futures contract, meaning you make money when the market goes down. Stocks, this is fairly restricted. If you're trading major stocks, there's easy to borrow stocks to short, but a lot of equities might be hard to short. And there can also be short sale restrictions on certain stocks. So with futures, it's never a problem. Stocks, you're going to run into some issues with short selling. And then we get to the volume data, which I already discussed. You're going to get real accurate institutional volume data right from the exchange. As a retail trader, this is 100% the best reason to trade futures, the liquidity and the volume data we're going to get as order flow traders. With stocks, there's a lot of hidden off exchange trading taking place with dark pools. So you're not getting the full picture. So why day trade futures? One is there's a very low barrier to entry. I mean, you can literally get started trading futures today with less than $50. You could have an account in a matter of minutes with a prop firm and be trading the live markets, most of which is in a paid simulator or a pay-to-play simulator where they'll actually pay you if you make money in a simulator as you learn. But still, you're trading with real consequences. You'll have access to global markets nearly 24 hours a day. There's real volume and transparent pricing, like we talked about with the exchange. If you're based in the United States, there's tax advantages. All right, the 60-40 rule, where 60% of your gains get treated as a long-term capital gain, which is preferential tax bracket over just trading stocks, which is always short-term capital gains as a day trader. So this is a huge rule. This will not happen in prop firms. This is only a cash account. Okay, cash account only does this apply to. You're not going to experience this with prop firms. There's no day trader rule that we talked about. These are highly liquid instruments. There's always tight spreads. You're never going to get really much slippage, easy to get in and out. So very easy to trade and get nice fills. This is very different than forex and CFDs, which can be very illiquid and can also have very wide spreads. So this is not only do we have decentralized data, but you're going to get better fills and better pricing with futures, which already as a day trader is going to give you a significant edge over forex and CFDs. Okay. And futures trading is ideal for prop firm evaluation accounts. It's so easy. They're very flexible with their rules. They allow scalping and all types of great strategies in futures that they generally don't allow in stock prop firms and things like that, which are already very few and far in between. So futures makes an excellent asset vehicle for trading in a prop firm. So let's talk a little bit about how futures trading works. Right? All orders flow through the order book. Okay, what's the order book? All right, if we look at, now the market's closed when I'm doing this video. So you're not going to exactly see what's live, but this is the order book. This is the NQ contract. And you'll see there's a letter after NQ. That's the actual contract we're trading. So futures contracts expire. The NQ has a different contract every 3 months, and then when that contract expires, we roll over and we trade the next contract. All right, so NQZ is the December contract, and then this is the year of 2025. All right, they have different letters for different months depending on the product. All right, again, something you would need to learn. So that's just something to keep in mind when you hear about rollover. That means we're just going to move to trade the next contract. That's when the next contract has more volume than the current contract we're trading. That's when we switch over and roll over. Okay, and then the order book is this. All right, the bid and ask size right here on the depth of market display. All right, I can see that there's 2 contracts on the bid at 980 3/4. And I could see, you know, I don't think there's an ask on this is only because the market's closed, but there's one contract on the ask at 91 flat. All right, normally aftermarket, there's only a couple of ticks between this. Normally there'll be a bid and ask right here. All right, very thin spread, usually very nice to trade no matter what time of day you're trading. So market structure is driven by auction dynamics. We have the bid versus the ask. I have other videos, guys, that's going to go into a lot more detail on this. This video is just to get you started. So if you're interested, I have so much more material and content in the Discord and on my YouTube that explains all of this. We're not going to do this all in this one video. And then your profit or loss is based on the tick value, right? So if you buy, this is NQ, right? Each tick is $5 in NQ. If I buy at 80 3/4, it goes up 1, 2, 3, 4 ticks. And I sell at 75, that's $20 in profit just for 1 point, 4 ticks minus commissions. You know, I wind up with, you know, just under $18 in profit just for capturing 1 point move. You capture 5 points, that's $100. All right, and you can see how much this moves. This is a 1 minute chart. All right, 1 minute from 58 to 86. All right, this is moving hundreds and hundreds of dollars in less than a minute. You can capture some really good money scalping futures. Right, it's a beautiful, beautiful thing. Okay, so key terms, the bid and the ask. There's the spread we talked about. We use market orders that gets you in immediately. Whatever if you're buying, you're going to get whatever the ask is at. If you're selling, you're going to get whatever the bid is at immediately. Limit orders, we're trying to get the best preferential price. So if I want price to come down to 80 flat, right, I'll put a bid here and the market has to come down and fill it to get an actual position. All right, that's a limit order. Stop orders are a market order that gets me out of a position when price comes back to it. So if I'm long, right, I want the market to go up from 80, right, and I have a stop order down here at 78. If I'm long and the market comes down to 78, it stops me out for a loss, about $40, 2 points. And we talked a little bit about the rollover dates, right? These change. In TradingView, which is a major charting program we use, okay, we use the continuous contract. Continuous, NQ1 exclamation point, actually ties all of the contracts together. You can't trade the continuous contract. I can't trade NQ1 exclamation point. However, we will use this for charting because it's going to give us, if I go to the daily chart, it's going to give me all the contracts put together so I can go back and see lots of data on one chart, right? And each of these is the rollover dates when we went from NQM to NQU, or we went from NQU to NQZ. Okay, so this is the continuous contract, so I can see all of the previous contracts together. If I went to just the current contract to chart out, I'd get very illiquid data going back too far. Okay, and then obviously it ends, and then there's no data after that. So let's understand leverage a little bit. All right, a small margin can control a very large notional value. What does that mean? In a cash account, you can trade an ES contract, one ES contract, right? Which we said has a $50 per point profit or loss. You can control this position for just $500 in margin, which means you need $500 in your account to take this position plus some because you need some wiggle room, right? Because once you drop below $500 in your account, they'll liquidate you, right? So if I have $600 in my account, say, and I trade one ES mini that requires $500, if it goes into loss by more than $100 and I drop below $500, they will automatically close my position. This is called liquidation because I didn't have enough margin in my account to continue holding that position. Why do they do that? Because with $500, I am carrying a $335,000 position for just $500. If I can lose more than what I have in my account if they didn't liquidate me. So that protects the broker. Okay, and that's how leverage works. I can actually lose more than I have in my account. So they'll liquidate me before that happens. Make sure I have enough margin to control the position. Okay, so example, $500 margin. Actually, this is 335 on the ES. It's even bigger on NQ. I think it's over $400,000. Okay, so this obviously amplifies both gains and losses. So you need to learn how to trade with leverage. We use strict daily loss limits and contract sizing rules to make sure we don't what's called blow the account. And what's blowing the account? That's when we lose more money than we can control with our margin. It blows the account. I held on too long and my losing position blew the account. Right? So we need to have very strict risk management rules with trading futures due to the high level of margin. So the beauty of this, of leverage, is that we can trade with small amounts of money. We don't have to come to the market with tens of thousands or even hundred thousands of dollars to make enough money to make it worthwhile. But the bad side of this is without strict loss limits, we can easily lose a lot of money, even more so than that's in the account. So it carries a high level of risk. But there's also a high level of reward. All right, so let's talk a little bit about brokers versus prop firms. All right, there's the broker path and then there's the prop firm path. If you're new to futures, I highly recommend starting with the prop firm path. Okay, why is that? Because if you're not familiar with futures, you're probably going to lose money at first. All right, this is not easy. If it were, everybody would be doing it and everybody would just be making ridiculous amounts of money. I can assure you right now, that's not how it works. All right, it's very hard and you need to practice and put in time to be able to do this successfully. So I recommend everybody start with prop firms like Apex Trader Funding, Top One Futures, TakeProfitTrader, Tradeify. I'm an affiliate with all of these, right? If you use the code Drysdale, you'll get a nice discount. And starting with these, okay, I do make a little bit of money if you use that code, right? In full disclosure, but I am an affiliate. I highly recommend you use one of these firms though, because this is going to mitigate your losses. All right, if you spend $50 on a prop firm and you screw everything up and you lose thousands of dollars in your prop firm account, you're only limited to the $50 you spent on that evaluation. All right, so this really controls your downside risk. All right, if you open up a brokerage account with $2,000 and you lose $1,000 trading futures, which can be very easy to do, you're now down $1,000. Right? As opposed to the prop firm path where you only lost $50. Okay, but we're going to talk about both. It's important to understand the differences. As far as a broker is concerned, I suggest Tradeivate or NinjaTrader. They're both one and the same. They own each other. NinjaTrader owns Tradeivate. Right? You can open up an account. You can also get a free 14-day demo account to try it out with streaming data. Okay, this is a great platform. We'll go into what this looks like. All right, you can open an account. You got to fill out all of the information. All right. This is not available in every country, but if you're US based or in a country that allows it, this is what I suggest. Open up a free demo account and go from there. Okay, this is what the platform looks like. All right, buy, sell, exit the position. All right, you'll need a chart. This is the symbol we're trading. Okay, this is a 1-minute chart. All right, this video is not going to be about Tradeivate, the platform, or how to use it or operate it. All right, there's tons of content out there on that I don't need to create. But this is what I suggest. This is what it looks like. And a lot of prop firms also use this same platform. So if you want a platform that you can use with both your cash account and a prop firm account, Tradeivate is a great option for that. So I highly suggest it. I think it's got a great depth of market display. It's got one of the best deltas. This is an indicator that measures buying and selling pressure. Okay, there's other videos on that as well. Not going into that right now, but I highly suggest this as a platform. Okay, so you need real capital, scalable. You get a lot more freedom, right? If you make $100 in your account that day, you can withdraw $100, right? But you're going to have a much higher startup cost, not just in the amount of money you need to trade futures, right? I mean, you can still get started trading with a couple $100, but you're going to need a lot more, really, if you're going to make good money or enough money to make it worthwhile. Also, the risk of loss in the cash account is big. So even though you do have this more freedom, and there's going to be the startup costs in terms of learning, you're going to probably lose money learning. All right. We consider that also a startup cost. This is almost a tuition fee for learning to trade futures or anything in general is losing money. Okay. So what I highly suggest is starting on the prop firm path. All right. Low entry costs. You can have an account right away, start trading within minutes, right? Whereas Trade of 8 may take you a couple of days to get approved and funded. You can be trading today if it's the weekdays when you're watching this with an account. Okay, you can go to what I suggest. You go to VWAPWave.com/top1. Okay, this will bring you to top one futures. All right, this is an excellent firm. You can get started trading now. Right, just press that button, fill out your account. These are the different types of accounts. Right, you can get started with their Elite Challenge, which is a $25,000 account size on Project X, and we'll talk about that in a little bit. All right, continue. It says $69 monthly, but if you use my code Drysdale, all right, this is now just $31. So you can get started trading with a prop firm with a $25,000 account where you can control several mini positions, right, with just $31. Okay. So I highly recommend that you get started with this. VWAPWave.com/top1. You can put in code Drysdale, and then you will automatically have access to this. This is Project X. This is their trading platform. It's an excellent trading platform. Okay. It's really easy to use. Here's your DOM, your buy, sell, change your position size. You have all your indicators in your charts here. All right, your balance, profit target. You have your performance stats. All right, number of trades, 153. My average winning trade, average losing trade, trade direction, long, short, best trade, worst trade, times a day. Lots of great insight on this. All right, it has copy trading if you want to trade multiple accounts at once. Risk settings, you can lock yourself out so you can't trade anymore if you're struggling with discipline. You know, I don't want to lose more than $500 a day, lock me out. If I make $600, lock me out, right? Liquidate and block me so I can't trade anymore. I can only take 5 trades per day. I can only take 15 trades a week. I can only trade ES or the euro or whatever it is, and put in all these wonderful risk management, right? And then set lockouts, and then you can lock yourself out from the risk management so you can't change your risk management settings, right? You've taken your 2 trades, you only have 1 left, and you go in, you're like, well, I want to take 2 more, right? So I'm just going to go in here and adjust my risk management settings, right? This creates an environment so you can succeed, guys, okay? It's easier to control your environment than control your willpower, right? All these risk management settings will help you live to trade another day and follow your rules and make sure that you don't get in your own way. All right, there's wonderful hotkeys for getting in and out of positions very fast. For my scalpers, we use this in the group. We're normally taking 5, 10, 15 points at a time on NQ or gold, making a couple $100 per trade in less than 2 or 3 minutes. It's fascinating, all right? Very powerful stuff. So you can get started with Top One for a very low cost, $31.05. That's the deal right now. Fill out this information. Agree to the contract, and then you can start trading this right away. Okay, so let's go back here. All right, so there's a lot of options, different size accounts. All right, so with the $25,000 challenge on Top One, right, you have to make $1,500. You can only lose $625 a day, and you can only lose $1,000 max. Okay, you can trade 1 mini or 10 micros. Consistency, which means you can't make more than 25 cents of the target in 1 day. If you blow the account, there's only a $29 reset fee. If you do pass, there's $149 to the funded account, and that's where you can start making money. Okay, but it allows you to really get started. If you want to go straight to funded, all right, you can get one of these, the 25,000 for $100. Right, you can start making money right away. You don't have to do the evaluation. Right, if you get started with one of these, right, let's say you do the 50. Now it's normally $324. That's 324 with the code, right? So we put in Drysdale. It's actually even better. It's $291 with my code. $291, you can start making money immediately in the instant funded accounts. No evaluation, just follow the rules. And what are the rules? You know, you got to hit X payout. So each account is going to have different rules. You could go to VWAPWave.com/Apex. Apex has very inexpensive accounts, no instant funded. You can go to Tradeify, TakeProfitTrader, VWAPWave.com, TPT. And I suggest you look at all their different rules. All right, they just have lots of different rules, how it works. I do have a guide in my Discord about all the different rules and the different firms, but these are the ones that I suggest. And you can get started right away. I also give away accounts in my Discord on my live stream, so definitely going to want to come check us out. So how do you choose the right firm for prop firm trading, right? You're going to want to read all the payout and drawdown rules, understand the profit targets, the consistency rules. You're going to evaluate the support and platforms that you can use with it. And then you're going to choose one that aligns with your trading hours and styles and things like that. So if you have more questions on prop firms, definitely pop into the Discord, ask questions. I have a full guide on prop firms that you can download in the Discord and check it out. All right. I have other videos on that as well. So I suggest Top 1 Futures, Apex, and TakeProfitTrader, and Tradeify as my top one. Okay. So you're going to want to practice first. All right. So if you buy that top one evaluation for $31, right? You're going to have access to this practice account, right? I can practice in a risk-free environment until I'm ready to trade my evaluation or my instant funded account, okay? Take trades, feel the buttons, press buy, watch it move, see how it works, take profits, take losses, all right? You can spend as much time as you want in here practicing and learning how it works, all right? Totally risk-free. Once you get how it works and how it moves, all right, then you're going to want to start practicing the system in here, a trading system, and see if you can be consistent making money day in and day out. And then once you've proven consistency to yourself with a trading system, then I suggest moving over to your evaluation and see if you can pass the evaluation at that point. Okay. So for $31, you're literally practicing, no other costs, and you're learning how to trade, you're learning the system, practicing the system, seeing if you could make money, prove it yourself if you can do it. If you can do it, then take the evaluation. Still, you've only spent $31. See how you do and go from there. All right. So it's an excellent low cost way of getting started in trading. And it's awesome. All right. So you're going to start in that simulator. A Trade of 8 brokerage account also comes with a simulator, right? Not all accounts come with simulators. If you want a free simulator, I recommend going with Top 1 Futures and using Project X. So you're going to practice placing market and limit orders. You're going to learn how ticks and volatility feel in real time. You're going to focus on execution at first. Profits do not matter. You're going to get comfortable with just trading in general. You need to build yourself some screen time and comfort before you start the evaluation. Okay. Now, once you've got the feel for things, all right, you're comfortable in the trading platform, buy, sell, you see how it moves, great. You've picked a product you're going to trade, NQ, gold, whatever it may be, micros, etc. All right, now you need structure, not just randomly placing trades in the market. You're going to lose. All right, so your system is context, setups, execution, and risk management. All of these things combined together for an actual trading system. Try to avoid the YouTube indicator trap. All right. There's going to be shiny object syndrome. You watch a new YouTube video. Oh, that sounds good. I'm going to try that. Oh, this sounds good. I'm going to try that. You can't keep trying new things because you're never going to get good at one thing. So I highly suggest you pick a system, you stick to it, and you don't get confused by other trading systems. All right. Because one trading system might have a rule that makes sense for that trading system, but with another trading system, that rule might not apply, right? So you get really confused. And it's not that it's a bad rule. for this system. It just doesn't apply to this system. So that's how you can get yourself really confused. So avoid the indicator trap. Once you choose a system you're going to trade, focus on it and try not to change. Okay. So learn one structured method very deeply, not 10 different methods shallowly, right? EMAs, MACD, RSI, order flow, ICT, silver bullet, PO3, Fibonacci sequences, Gann level, it goes on ad infinitum, guys. You got to limit the noise. All right. It's great to know about all these different trading tools and indicators and systems, but it's not going to make you a profitable trader. I can assure you right now, it's how you execute one system well. All right. So with the VWAP Wave system, I provide you everything you need to know with a full all-encompassing trading system. All right, it's based on auction market theory. This is how markets really work. The market is an auction. So we trade the structure of the market and read the auction. And then to do that, we use the VWAP, which is a volume weighted average price. We use the volume profile and initial balance for structure. We focus on two different market conditions, right? Whether we're in a balanced market, right, where we're trading sideways, or price discovery, balanced, right? Balance, price discovery. Okay. So we focus on these actual market dynamics. We have 4 core setups that you're going to look to trade each and every day: the price discovery continuation, fade value or extremes, return to value, and the VWAP bounce. Again, we're not going to go into these details in this video. I have lots of great videos and coursework that's absolutely free in the Discord for you to get started on this system. Okay. I have a free guide and I have a free course that you can take to learn all of this and get started. I have a best-selling book on Amazon that is also very inexpensive. And I preach that reaction is better than prediction. We trade the structure. We do not try to predict where price is going to go. So what are the common pitfalls that I see futures traders making, especially new traders? They take on too much size too soon, right? They trade big and they take big losses. They're chasing breakouts and ignoring contacts, right? It's going up, buy it. And then they immediately get trapped and it goes down, or it's going down, short it, and it immediately comes back up. So that's chasing price instead of trading the structure. They tend to get very emotional while they're trading. All right. They don't like taking losses. So then they revenge trade. They size up. They start trading aggressively to try and make it back or hit their profit targets. All right. These are huge traps. They ignore session structure. All right. They don't understand how London moves at night. Maybe they're trading at midnight Eastern Standard Time, right? Wondering why the market's moving so slow or a little more illiquid when the market opens 3 a.m. Eastern Standard Time for London, 8 p.m. Eastern Standard Time for Asia. New York opens at 9:30 in the morning, how that relates to gold versus the U.S. stock market. All right. There's a lot to know about these things. So you have to learn session structure. And then the biggest mistake I see a lot of new traders or traders in general do is they don't journal. There's no feedback loop. All right. They just show up every day. They trade. Some things work, some things don't. They don't really know what or why. They come back tomorrow. They do it again. They make mistakes. They realize they make mistakes. They don't journal it. They come back tomorrow. They forget about the mistakes. They make them again. Right. There's no feedback loop. Right. They're not understanding what to change. There's no structured way of getting better. And they're literally just showing up like it's a pickup basketball game, having fun. It's entertainment. And they never really find consistency. So what's the right path forward? All right. You want to learn market mechanics. You're going to practice in the simulator. Your next test is going to pass a prop firm evaluation. You're going to get funded and then start getting payouts. We're going to focus on the process in the beginning, not the money. I can assure you, if you chase the money in the beginning, you're going to lose. That's what happens to everybody. Those that focus on the process, on getting better and being patient, they're the ones that do better in this business and find longevity. You want to learn how to master the VWAP Wave structure. You want to learn a trader mindset that's going to help you succeed as a trader. And here are my final thoughts. Futures reward structure and discipline, right? Not randomness and gambling. Small, consistent wins are always going to pay better than big, random wins. You'll ultimately lose with big random home run trades. You'll give it all back. You need to build habits that support longevity. And you're not late to the party here, guys. You're early to real trading. All right. This is the golden age of trading, in my opinion. There's never been a better opportunity to become a retail day trader than now. With the tools and prop firms and education. Guys, I started trading 15 years ago. We had none of this. The education was terrible. And I traded at a real prop firm with real traders. Right? What they taught me was nothing than what I get for free on YouTube now. It's insane. You had to trade with cash. Even at a prop firm, you had to supply risk capital. So when you lost, they took it out of your money. Okay. So with prop firms, we've really mitigated the loss factor while you're learning how to trade. All right. The golden age of trading is here. So what's your next steps? I want you to download my free VWAP Wave course setup guide, start learning the principles of the VWAP Wave system, start learning the setups. You're going to open up a prop firm evaluation. You're going to join my free Discord community, ask questions. You can learn, take the course with a free trial, a free week trial, and you're going to learn the VWAP Wave system step by step. All right. So you're going to head to VWAPWave.com. That's where you can grab the free guide. You will then join the free Discord, pick up your evaluation at top 1, grab the practice simulator, and you can get started as soon as today. All right, come find us in the group, guys. I appreciate you taking the time to watch this video. I look forward to seeing you in the group. I wish you much success in this trading journey and that you find success. Take it slow, trade small, manage your risk, and stay sharp out there, traders. And I'll see you in the group, and I'll see you in the next video.